All right. Cool. All right. So, like I said in the chat, that this is going to be a presentation over researching dividend stocks. I kind of want to go over just a few metrics that I like to look at in terms of buying or at least researching dividend stocks that I want to invest into. And then, these aren't the only these aren't the only things I really like to look at, but these are things that I find myself to be very important when I want to invest into a company. And so we're going to talk about that today. My name is Colin, but you probably know me better as Decade Investor. That's me hanging out in Well Squad at Decade Investor. And if you have a question, I'm the guy that does all the YouTube videos. So that's me, Decade Investor. So when we talk about dividends, I always want to make this clear because it's important to remember this, that companies are never required to pay a dividend. Just because a company pays a dividend doesn't mean that it has to continue to pay that dividend. Just because a company stops paying a dividend doesn't mean it can't start paying a dividend again. Just because a company has never paid a dividend doesn't mean it won't ever will start paying a dividend. Doesn't mean that it won't ever will pay it. Like they're never required to pay a dividend. So just something to remember. And secondly, see dividends as a cherry on the top of your investment. So I personally like to look at when I'm investing into a company, I see the dividend as a cherry on the top, especially because I'm younger. I'm going more for total return over income. If you've watched any of my YouTube videos, you hear me talk about that. I'll get on that later on in this video or in this presentation. Thirdly, investing solely for a dividend could bite you in the tail in the long term. And finally, always do your own research when buying stocks. These are just a few things that I personally like to look at when it comes to investing into companies that pay a dividend. So this is just something as a quick little checklist to remember. Companies are never required to pay dividends. Personally, I see them as a cherry on the top, and investing solely for a dividend could bite you in the tail. So there are really two types of dividend stocks that I see them. And you have a dividend income stock. So this is a stock that probably doesn't offer great growth, but it does offer, hopefully, a solid, consistent dividend. And that would be companies like Exxon, Chevron, Altria, Johnson & Johnson, Waste Management, companies like that, where you're not going to see like the stock price grow at crazy amounts, but what you are going to see is hopefully that dividend is solid, consistent, and at a higher yield that's producing pretty decent income on your investment. Then I see what is a dividend growth stock. Now, this is stocks that usually don't offer the highest dividend yield. So dividend income usually offer higher yields. Dividend growth stocks usually don't offer great dividend yield, but they do offer solid above average growth. So to me, I see dividend income stocks as high yield, lower growth, and then dividend growth stocks as higher growth, lower yield. An example of dividend growth stocks would be like a Microsoft, an Apple, MasterCard, or Visa. I know those haven't really done well this year, but Microsoft and Apple are, they carry lower yields, but they offer really, really good, historically speaking, growth in terms of share price. So your total return is really, really solid with the dividend growth stocks. So these are just four things I want to cover in this presentation, that what I look for when looking to invest into a company. Number one, I like to look at the historical growth and the future growth of that company. So, hey, is this stock grown in the past, or is it down? Is it stagnant? And then future growth, I'll talk about that a little bit more when I get to this slide. But, I'm more of a fundamental investor. So I like to look at the fundamentals and really like to look at like leadership and management. Are they trying to do things to grow the company? Secondly, I like to look at historical growth and future growth of the dividend. So this is now just looking at the dividend. Hey, I'm investing in this company. Yeah, I see the dividend as a cherry on the top, but I would also like to see that dividend grow. I would like to see that dividend continue to grow, and I would like to see it has grown in the past. So I like to look at those things. Then I like to look at payout ratio. It's important to look at. We'll get to that why it's important. And then finally, the current standing of the company. So how does the company stand like present day? Is it a good investment? Is it a bad investment in present day? So these are just 4 things that I like to look at, like right off the bat. This is kind of more of a right off the bat. Hey, I heard of this company. I heard of this stock. I want to look and see what these numerics or what these 4 things offer for this company. So I'm going to use Johnson and Johnson throughout this presentation to make it simple, to keep the continuity between looking at the numbers. So like Johnson and Johnson, for those that don't know, Johnson and Johnson is an American multinational corporation founded in 1886 that develops medical devices, pharmaceuticals, and consumer packaged goods. Sounds boring, but in terms of an investment, especially a long-term, just kind of set and forget type investment, that's a potential for a great dividend payer. So just here's a few of Johnson & Johnson's insane product line that they offer. More than likely you have at least one of these in your house, if not more. And so I want to use this stock as an example throughout the presentation of what I look for when investing into a dividend stock. So I want to look at the historical, like I said, the historical and future growth of Johnson & Johnson. So in terms of historical growth, right, that's just a simple, on Google, I will type in J&J or Johnson & Johnson stock, and you're able to pull up this graph. And you can click the 1 day, the 5 day, the 1 month, 6 year, 6 month, year to date, 1 year, 5 year, or max. You can kind of see the chart. So we can look in the past 5 years, this stock has up 40%, just call it 40% in the past 5 years, or on average 8% in the last 5 years. Now, obviously that's not an 8% guarantee every year. Some years might be down. We can see here that this year is pretty much flat in 2018, actually kind of, if we look at it, probably had a little down year, but on average has returned 40%. And so obviously that is not predictive or guarantee that in the future it will average 8% every single year. But it's good to see that, hey, this company is on a growing trend. Now, when it comes to the future growth, right? So that's kind of the historical growth. You kind of check it and say, hey, if this chart was on a downward trend the last 5 years, then you would look at and say, why is it on a downward trend? Maybe it's for a multitude of reasons. Maybe it's reasons you don't want to invest. But in terms of the historical growth for Johnson & Johnson, has been looking good. Now, in future growth, you can read articles and you can look at their financials. And so for me, financials are important, and there's something to look at. But I really like to look at the management and the company, see what the leadership wants to do. So, for example, Johnson & Johnson in the last couple of years has really focused in and mentioned many times that they want to get into the technology side of surgeries. So like robotics and in healthcare and within surgeries, and they want to put money in R&D, research and development, into this space. And personally, I think that's a massive space moving forward. Tech and healthcare basically merging. And so I like that, right? Johnson & Johnson is a massive company. It's easy for them to just kind of sit back and let the sales roll in and they'd be fine. But the leadership wants to continue to find growth opportunities for this company. And so I like that. And that's why, personally, I like Johnson & Johnson. But that's one way to do it. You read the articles. Then you can look at financials, like I said. Hey, how's their net income, their net revenue? What's their, cost on marketing, right? What's their administrative cost? Like there's so many things you can break down with the numbers. But with that being said, the reason I don't lean heavily on numbers is because sometimes numbers don't always tell the full picture. And like, for example, last year in 2020, now Johnson & Johnson might be a bad example, but like, let's look at basically every other company, like let's just give like an airline, for example, or a cruise line or a travel company. Their numbers from 2019 to 2020 are going to look dramatically worse because of something they were, unable to control. It was an external force. The pandemic really hit their numbers. So you can look at the numbers all you want, but sometimes you have to like zoom out and read articles and just kind of see what's going on in the world. And this, the numbers in terms of Johnson & Johnson is easy to find. And you can probably find steady numbers because it's a very mature company. But in a less mature company or a newer company or a company maybe not in the stage that Johnson & Johnson is, sometimes the numbers aren't always going to tell the full picture. And so that's why, as much as looking at the financials is important, I personally lean more towards leadership and reading articles about what they are trying to do moving forward. Not necessarily spend my entire time looking at the numbers, because like I said, numbers don't always tell the entire picture. Then if we look at the dividend, or excuse me, the historical growth and future growth of the dividend, this is just on, I just type on Google Johnson & Johnson dividend. This is the NASDAQ website, and you're able to see, I mean, you can go way back further, but this is just what the screenshot is, the 2015, the dividend. And we can see here that in 2015, every year they're increasing 5 cents, 4 cents, 6 cents, 5 cents, 6 cents, 5 cents. Every single year, Johnson & Johnson has increased their dividend. It's really impossible to try and predict the future growth of a dividend. You can use, just like it's basically, it's the exact same thing as a share price. Like we can sit here and look at the share price of Johnson & Johnson and say, okay, it's 40% in the last 5 years. Can I guess, you can't assume it's gonna be 40% moving forward. So we can't assume every year is gonna increase by 5 or 6 cents. However, Johnson & Johnson is a dividend king, and a dividend king, to be classified as a dividend king, the company has to increase their dividend for 50 plus consecutive years. So for the last 50 years in a row, at least, Johnson & Johnson has increased its dividend. So you can kind of lean on that factor because, for a couple of reasons. Number one is because that's a really, really huge title to have next to your name, like a dividend king. And so companies usually don't like to, if they're there or they're close to it, they don't like to like jeopardize that by not increasing their dividend. And so that kind of leans to you like, hey, I like this idea for Johnson & Johnson because, it's a good stock, it's a good company, and the dividend share on the top, like it's going to grow. At least it has for the last 50 years or 50 plus years. So when you look at the dividend, right, to me, I just like to see if I'm going for that dividend, not necessarily going for it, but if it's a part of that stock, I like to make sure that I'm seeing at least dividend growth or at least consistency in the dividend. So if it's not growing, that's not necessarily a bad thing, but is it declining, right? Is there stability in the dividend? The next thing is the payout ratio. So what I was kind of talking about earlier, you want to see the payout ratio tells us a few factors, but basically what this tells us is how much of their money or their income are they paying out in dividends. And so we see here Johnson & Johnson, their payout ratio in the trailing 12 months, so in the last year, is paid out 52.8% of its earnings in the form of a dividend. The higher that is, the more aware you need to be. And the reason for that is because the higher that is, that means the more of their income they're taking in, they're paying out in the form of a dividend. And if they're paying, like if they're trying to increase their dividend and maybe their income doesn't increase as much, they could actually be paying out more in terms of their net income in the form of dividend than they're taking in. And that means that dividend might not be stable to continue to grow moving forward. So payout ratio, you just want to be weary of it. Like, hey, don't, if it's at 90, 100%, that's something that you might not want to, it's definitely possible for companies to pay out that based off of like free cash flow, like other metrics, but usually it's a good metric to look at. Hey, what's the payout ratio? Is it really, really high? Does that mean that the dividend is sustainable and stable? Yes or no? Now, with that being said, a REIT, so like Stag, what's another one, like NYMT, like companies like that, APTS. A REIT is special because by law to be considered a REIT, they are required to pay out at least 90% of their earnings in the form of a dividend. So when you're looking at like a payout ratio or a Stag or another REIT, it's going to look at 90+%. So that's just required by law. And so that's a little caveat with REITs. But basically, this is really good to see, hey, how much of their earnings are they paying out? Is it 30%? Is it 80%? Is it 150%? Is it 6%? Right? And this kind of goes for a lot of different reasons. But it's just good to see, hey, what's the payout ratio? Is this dividend going to be stable moving forward, investing into this company? And then finally, I just like to look at like the current standing of that company. So sticking with the theme of Johnson & Johnson, like I'm looking at news. What's going on with Johnson & Johnson right now? In this case, most recently they came out with a vaccine. Like I mentioned earlier, they're focusing on technology and healthcare. That's kind of where they're focusing for the future. And it's a strong company with everyday household products that we all use. So I see that as, okay, if we hit a recession, if the economy is bad, like people are still going to probably buy Band-Aids. People are still going to probably buy Tylenol, right? They're going to buy these everyday consumer staple products. But Johnson Johnson is bigger than that, but that is a great baseline of their company. And so I just like to look at a current standing, and that's just reading articles, maybe reading press releases about that stock. Just kind of see where they stand, right? You want to make sure that, you can look at the future outlook, you can look at the past history of that stock, but where they stand today, right? Maybe there's a lawsuit that came out with that company, or maybe they just got an acquisition that's going to help them, right? Just kind of spend time on Google, just reading news about that stock, or like on, Robinhood or other platforms like M1 Finance. Usually when you look at a stock, there's articles that you can click on from their page to read about that stock. So just spend some time reading a couple articles and see what's going on currently with that company. You want to make sure that, again, you're entrusting that company with your money. And so you want to make sure that, you're trusting that company to hold your money. You don't want to put in something that is going to lose you money over the long term, or is going to, close or go bankrupt or stuff like that. So you just really want to, I spend probably the most time looking at this. I spend the most time looking at current standing and future outlook of that company, because I want to know, hey, is this company good? Is they going to continue to be strong? And then future, what are they trying to move forward? What's going to grow them in the future? That's going to grow my money. So this is an old, these are 2 old videos that I put on there. Talk about the thumbnail. But make sure to always do your own research. I'm the guy that always posts YouTube videos on different stocks, ETFs, and everything to help you all, and to help myself, because I enjoy doing this. So, and it keeps me on my toes. But I'll post the channel in the chat that I have breaking down stocks, ETFs, my own portfolio. You can see what I own. But always do your own research. Like I said, if we go back to the top of this presentation, these are just 4 things that I look at, 4 like main starting points. Again, these aren't the only 4 things to look at, but for me, these are what I really find important starting off. Hey, historical growth, future growth of both the company and the dividend. What's the payout ratio? And then finally, what's the current standing of that company, right? I really want to know, again, I'm investing my money into this company. Are they going to work to grow my money, or are they just going to kind of just sit back and let it just do whatever? And it's important to also understand the types of dividend stocks, because if you're investing in a dividend income stock, you're not going to see, probably more than likely not see that growth that you would see in a dividend growth stock. Now, for me, since I'm younger, and I tell all my younger investors, focus on dividend growth stocks over dividend income stocks. But that is a conversation we can have if someone has a question on that. But these are the 2 main types. So, understand what you're going into, whether it's an income stock or a growth stock. But that is the presentation. That is the conversation tonight. So if there's any questions, I'll hang around and answer the questions. If you're headed off, happy Thanksgiving. If you celebrate that this holiday, happy Thanksgiving. And I'm thankful for all of y'all in the squad, and thankful for everyone that joined tonight. Specifically, you hold a special place in my heart for coming here the day before Thanksgiving. So thank you. And I'll take some questions. You can either send them in the chat or raise your hand. I'll do either. But thank you again. And if you have any questions and you're logging off, or you think of any, always feel free to just ping me in the chat at DecadeInvestor, and I'll get back to you soon as I'm on. Usually I have it on my computer all the time. So I'm always around to answer your questions.